of course, do's and don'ts, and very important, most common business risks tested in AAA, which are repeated. Okay, so let us proceed with the business risk. So business risk of any company, remember, I am not talking about audit firm. I am not talking about financial statement. For any business, for any company which is doing business, that the business may not achieve its objectives. And this is the failure to achieve objectives. So those factors which can be internal, which can be external, all those factors which actually becomes a hurdle in the achievement of organization's objectives, they are called business risk. For example, that may be the competition in the business environment, external factors, competition. That may be the technological change. That may be the legal change, laws and regulation change. That might be affecting the business and its future, its profitability, its expenses, its assets value, customer taste change, fashion change. So these are the various factors which are affecting the business. External. Now, what can be the internal factors? Control failures, poor organization structure, governance, weak or that software which is corrupted. So internal policies and procedures. So these are maybe the internal factors which may result in the failure of organization, in the failure of its, the organization which is facing, so its objectives may not be achieved because of these factors. So those factors are called business risk. Let me link it with your practical life. You have to travel from the one point to the other by driving on this road. You have to travel. This is your objective, the target. And you have to travel safely, and you have to be safety, and you have to reach there timely. Now, what are the factors which become, hindrance in your safety that may be present in the car, within your driving, or the external road condition, weather condition? So internal factor or external factors which can become a problem for you in achieving your objectives. So they're all risks for you. So business risk for any organization. Now, this question is very valid question. And you may ask, Mr. Hamzah, we are talking about auditor. Auditor has only one objective. That is, auditor has to report on financial statements of company. Auditor has linkage with financial statements only. So why we are talking about business? This is a valid question. Why auditor is interested in business? When by law, by agreement, normally their work is confined to issuance of audit report. A valid question. So the answer will be there. That, listen please. Tell me one thing, who is responsible to achieve objective of organization? Who is responsible? They are the directors of company. They have to achieve organization's objectives. And at the year end, they have to prepare financial statements which are part of annual report, that how they have achieved objectives of company. and they have to present this annual report in front of shareholders. So now listen, and it means any business risks which are arising here against the objectives of company, they have to be managed by who? Directors of the company. They must have to manage that. They have to make arrangements. It means if they are unable to manage those risks, what will happen? The objectives will not be achieved. Business will be failed. And directors will hide that, may not disclose that correctly in annual report and financial statements. There is highly likely, because they don't want to show their poor performance. They want to hide that. So ultimately, when business risks are not managed by directors of the company properly, it will be affecting in preparation of financial statements. Highly likely. Because business risks, when they actually occur, they affect normally business performance. They affect cash flows of the company. Negative cash flows increase, inflow decrease. They affect asset impairment, business risks, the penalties, fines, sales revenue fall when the risk occur, bad reputation occur, expenses increase. So, and directors of the company may not present them correctly in financial statements, because it will risk their job. It will risk their bonuses. So that's why auditor is trying to figure out the root cause. This is called top-down approach of audit. Top-down, sorry. That you go to the root, that what is bigger approach? When auditor has time, and for this approach, the auditor has to spend sufficient time, because understanding the business risk of the company, it takes a lot of time. Instead, you are directly auditing the financial statements. If you do two approaches, so you identify business risk of company and you link them to risk of material misstatement in finance. What can go wrong if they occur? And then you apply audit work on that. So this linkage should be very much clear, but the difference should be clear as well. Here comes where students do mistakes, that they are unable to establish a link. I told you two things, that what is the link between business risk and audit, that is clear. But then what is the thing which actually differentiation while drafting answer on business risk? Here students actually get confused and they do mistakes. And we will be talking about today about the same. So now, I hope this point is clear. Now, business risk, once again, if I come to this, that the business risk, when they occur, what happens when business occurs? There is some objectives of organization may not achieve. The cash flow may fall, cash inflow. Some expenses may increase, liabilities may increase, penalties, provisions may need to increase. Assets value may be impaired. sales may fall. Got it? So this is the ultimate result of business risk. When you are drafting answer and explaining, so in the exam scenario, we need to find all those factors. We need to find all those factors, internal or external factors of company, which ultimately it may affect business adversely. Because of its cash flow may fall, expenses may increase, business survival may be threatened. So all those factors that need to be identified, they are called business risk. And now, then come here. So we need to, the first thing is identify business risk from the scenario. What is the condition C, which I call causing the risk, factor causing the risk? What are those factors? So you need to quote scenario facts, numbers, details. What is the factual situation causing the risk, may cause the risk? Remember, I have explicitly, it cannot be generic. You need to quote facts from the scenario. It cannot be speculation. So see, then second, why it is a risk? You need to support, provide evidence why it can and how it can become problem for the company. For example, the company is seen that it is being sued for unethical activities. So why it can be a problem? What can be the issue? So the customer may get disturbed from an unethical practice, company doing unethical practices. They may protest against the company. They may stop buying product of the company. And remember, again, if you have some data from the case study, do quote that. Any amounts, any percentages, any legal matters, factors, and very important, assess how severe is the case. If it is about the major sales of the company, is it about the operating lessons of the company? How severe it is? Is it about the continuity of operations of the company? It is about the big amount of penalty, severity. Assess severity. You cannot say that it is very serious threat. How? You have to justify. Again. And then, so evidence, whatever you are saying, this matter is a risk. By quoting from the scenario, how? Provide evidence. Discuss. Justify. And then the third point, you have to tell what if this thing occurs, what will be the ultimate impact on the company and its financial health. Consequences for business, which I have already explained, increase in cost, decrease in asset. Students, what happens actually, majority of students do one blunder. What blunder they do? They tell issue from scenario, which is called condition, and they directly tell impact. They do not explain why, how, severity, no, logic. So you lose mark. Their answer lack depth. And even one or two lines are enough to explain something from scenario. Build argument. Justify what you are saying. And very important, this is for professional marks. Scale business risk if it is possible. Sometime it happens, one business risk becomes serious if another business risk arises. For example, company is already having liquidity issue, cash balance is low, and now there is a court case as well in the court. If court case decision is announced against the company, company have to pay 5 million penalty. So liquidity risk is already there. Company is struggling to pay its liabilities, its finance, it manage its cash. So if it is goes against the company, it will become further severe. Third risk, if overdraft is recalled by the bank, that is not renewed, things will become further severe. So this is called scaling of risk, that you are seeing the bigger picture as well. This one risk, when they combine, they are actually contributing to each other. This is called scaling. So CEI framework is perfect framework and scalability as well, which I have mentioned separately. And remember, it is 2 marks each business risk. So if there are 8 marks question, so how many? 4 business risk. Some students here do mistake. They write more than required. Never do that. If you have identified 5, 6, 7, never write more than required. Remember that. Now, so students, I have already, these are the examiner reports. I told you I will discuss what examiner says. Word from examiner. Examiner says all information is given in the scenario, what is needed. So you should focus on information risk arising from scenario, not speculate on something which is not given in scenario. Please, you should not do that. So in order so now these are again examiner's word, that how to evaluate business risk, identify risk from information provided, illustrate the impact. They are not said give the impact. Illustrate also means that what is given in the scenario, how this impact may arise. And then scale risk, 2 or 3 risks together. So this is word from examiner. What your examiner is saying. Now, so you will, now these are the blunders to avoid. Remember, if they have said in the scenario that an accident has occurred, so accident has occurred is not risk. Company has violated laws and regulations, it is not risk, because risk is something, business risk is something which may happen, may occur. These are facts: data breach, credit card details lost. Risk is business risk, specifically business risk. I'm telling you, it is something uncertain which has not yet occurred. So if you are calling something which has already occurred in the business, its objectives are already disturbed, that will be blunder. Or some risk, examiner is explaining, for example, company is involved in the 30 currencies, it is doing business, 30 countries, currencies. And then the scenario itself says, now being a businessman, what can be the business risk? That currency risk is high. Any change in or fluctuation in the exchange rate may cause loss to the company. Okay, right? Its purchases may become expensive because of exchange rate movement, sales revenue may fall. But if the scenario is telling in the next line, company has hedged it properly using derivatives. If scenario is saying that, you cannot discuss it then, because they are already scenarios telling you it is dealt with already. You cannot discuss it. Remember that. And very important, you cannot tell the impact of each business risk that going concern may be threatened. Extreme outcome, for example, you are, at your home and you are having a small flu, regular seasonal flu. So if someone comes to you, say you may die because of flu. Oh my God. You cannot accept this from someone. You say, what you are saying? This is insane. Because of this thing, this worst outcome cannot happen. So same is for the business. That data breach, for example, it does not may become company bankrupt if it is small fine. Not every business, because you have to talk sense. Very important. Remember, business risk is not audit risk. You have not to tell impact on financial statements. You have not to tell impact on financial statements. You have not to discuss accounting treatments. No misstatement discussion or treatment discussion, accounting treatments. Never ever. Because we are talking about only business risk. No audit procedure, no control testing. This is very, very, very important. If you are writing business risk, you need to have these 2 pages checklist. One, each business risk, 3 things. It is coming once again. I will be repeating it again and again today with you people. Okay, now, so these are the 7 past paper questions on which have business risk, and these are all latest past papers. So what I'll be doing today I will be talking about Mercurio company and Hammer company scenario with you in the live class. I will be giving you one home assignment to be sent to me by this Saturday evening maximum, so that I can mark and return you before next live class. And I myself will be marking that. Okay. Now, so this third is Speedy Style company. I have given its link already on YouTube, my YouTube channel it is. 2 questions further I will be solving and sharing a video on it with you. And 1 will be your home assignment. 7 business risk scenarios, if you solve them properly, have command on all these factors, that will be more than enough for you people. Minimum 7, but 7 minimum, not more than that. Okay, now, so let me share with you one of my drive link where you can download my notes. Just a minute, please. I have sent to you in the chat box my Google Drive link. Okay, now, so let us proceed further. So then the next topic is, so you see here, we have talked about the checklist is here in front of us. What is business risk? It is already done. 2, 3, 4, 5, Now, most common business risk tested in AAA exam. Let us go through this first. Then I'll come back to those two exam scenarios. So, most common, which I have extracted from your past questions, past papers. Yes. Repeat it. So, students, now, again, you need to read scenario properly. Sometimes they say the business is doing rapid expansion. You find this information. There are acquisitions. Now, rapid expansion may be in the new countries, buying new companies. There are synergies expectations, or they have acquired, they have expanded. So this expansion may become risky for the business and they may fail. Because of what can be the factors because of which they may fail? Business may not be properly integrated. New markets may not be known to management. And hence, they may not manage business properly. They may not manage risk over there. Their estimation of growth may be inappropriate. When business, yes, and when they may not be realized what they are estimating. And then increased operation complexity and size. When the operation may become complex, size may grow, management may not be able to manage that. Costs may increase, operation may deteriorate. Possibility is there. And management may be they are doing over trading. They are unrealistic expansion plans. Plan may not be properly thoughtful. So normally it is in the group audits, overseas expansion questions. Normally it is there. Then comes, yes, very important, new market, overseas. One of these points I have actually further elaborated because it is tested. Overseas, when the business goes overseas, new market, they acquire foreign subsidiary or they establish their company. So there might be new legal requirement, new cultural factors. There might be, the practical difference, practicality of managing the two companies. Now, cultural currency differences may be there. Company has to rely on the local, the people from there. So these are the facts from scenario. When you are going overseas. So what are now how you will explain them? So when you go overseas, you may not have understanding of local market, local customer. Cultural and operational. People operate, work in different way. In different perceptions are different. Values are different. So hence, whatever you are going to launch, that may not be acceptable over there. The way you are going to deal, that may not be acceptable over there. And this is what I was saying. Difficulty in managing remote operations. You are in your own country and you are going there, you are going to manage that. How? Far-flung area. Cost of managing the business. Local operations may be ignored. That may be another factor. That may be a factor. And that international operations that may not be aligned with the group's overall policies. May not be possible. So these are the business risks. And of course, here, currency risk. That may be the loss. Exchange losses. Exchange losses may be there as well. Possibility. Yes. So the next point. So all these factors, I have scenario. Find things in the scenario. Find things in the scenario and explain them. Now, liquidity, pressure, or funding issue. There is high overdraft in the scenario. Bank covenants are going to be breached or about to be breached. You find this information from the scenario. Company's cash flow issues, loan renewals pending. Company has a heavy capital expenditure. If one or two or more are there, company is having these issues. Business risk. So what is how to explain? Inability to meet short-term obligations. This is the business risk. Funding can be withdrawn. Very important, management will be under the stress all the time. Sustainability of an operation may be threatened. And in worse circumstances, depending upon the situation, going concern may be affected. Business risk. Now, dependence on one customer, two customers, 10 customers. Dependence on one supplier or two suppliers. One major customer, exclusive supplier, long-term contracts, loss of key contracts. These are found in the scenarios. So if it happens, what will happen? Revenue reduced and company has reduced bargaining power. They will be depending, they may not take the decisions. And if supplier leaves, supply chain affected. For example, in one of the past paper, they said the supply is from overseas supplier, and due to some issue, political issue, that supply is disrupted. Or there is chance that it may be disrupted. So business risk, customer may move somewhere else if you do not supply timely. In another scenario, the latest one it was, they said that the goods are reaching 2 months late when the season is going to end. So what will be the impact? First of all, there will be out of season. Stock may not have, stock value may be decreased. It may not be saleable at same price, loss to the company. Remember, I am not talking about valuation. Remember that. No misstatement, no accounting treatment here. Second factor may be here that the customers will not wait 2 months. Delay of the inventory arrival. They may switch to the other suppliers, other sellers, may buy from them, and company may suffer. Got it? Now, so manufacturing, retail, yes. So very repeatedly tested, weak corporate governance, repeatedly tested. So it is an owner managed company. Family members are there on the board. There is a dominant CEO, does not consult anyone. No independent or few independent NEDs. No board committees or weak committees. How it is a business risk? Decisions, lack of challenge. Decisions may not be properly evaluated. Reduce accountability. Long-term sustainability. How? Because there are control failures may be high. business is not properly functioning. When control failures, it means what will happen? Losses, inefficiencies. Problematic for the company. We are not talking about financial statement. I'm repeating it again and again. We are talking about business risk. Now, so in the family business, private companies, founder-led entities, it happens. Now, heavy reliance on IT system or new system. Company has introduced new system, IT system, or they have outsourced automated system, or there might be system failure risk as well. Even maybe it may have occurred once in the history. So they are overly dependent on a system, or they have implemented a new system. Two things, overly dependent or new system introduced. What will be the operational disruption if system fails? Core operations, they are dependent on technology. If it failed, no backup. What will happen? Customer dissatisfaction. May not be able to fulfill agreements. Depending upon scenario information. Remember that explanation will be as per scenario. So transactions may not, so customer may not rely on you. So e-commerce businesses, retail, services entities. It is scenarios are there. The next is legal risk. So highly regulated industries, financial services, healthcare, for example, laws and regulation environment. There might be licensing requirement that you have to be licensed. Operating license, testing, government test, grant certification, and then you can start. What will happen? So if you are non-compliant, penalties and sanctions. Reputational damage may be there. Cost, very important, very important. When there is high legal requirements, high cost of compliance. You may lose the license to operate, but remember, you can mention only this when scenario is mentioning license requirement. You cannot mention license everywhere. Your examiner has specifically given in one report that there was no licensing requirement in the scenario, but students wrote that license may be lost. So legal matters, you may be penalized, you have to defend the case, and this will be high cost. Reputation damage, customer may leave, revenue may fall, cost may increase, liability may, so like this. Now, so very important, again, against and against, means again, in frequent scenario, it is tested. There is increased competition. New entrants in the market, declining demand, price war, heavy marketing, and advertising. That may be the possibility given in the scenario. So now you have to explain them into business risk, and you have to find information about these matter in the scenario. Again, in the scenario, some factors, if the scenario is silent, then you can discuss in them these things in generic. So when there is increased competition, profitability will fall. Heavy marketing expenditure, profitability will fall. And you have to mention how much marketing expenditure. If there is increased, yes, market share may be lost. Revenues may be lost. Cash inflows may be lost. Company may not evolve because sometimes innovation in the market, innovation. If you do not unable to adapt according to that, just like Nokia, we all know the famous example of Nokia. They could not disrupt timely. Decline. Now, HR and people risk. High staff turnover. Skill shortage. Certain skill is needed by your business, not available. You are relying on few people. You are not training people properly. For example, you are offering medical services. So training will be of top notch. So what will be the impact? If high staff turnover, there is skill shortage, you are relying few people, they may leave. Your training and recruitment cost will be high. You may not have continuity of providing quality services, depending upon situation again. And 10th, yes, ethical and reputation rating. Ethical, yes. In some of the past paper, they say the company enjoy a high ethical reputation. They are seen to be ethical. Customer make contact based on that. So if the company is enjoying this reputation, customers come towards that company because of this reason. Company is getting awards based on ethical compliance, but scenario is telling they are doing something unethical. They are not paying staff timely. They're forcing them to work without providing the technical gear and equipment, putting their health and safety at risk. Possibilities, so health and safety risk is also there, laws and regulation. Plus ethical risk is also there. So the reputation may be damaged. Stakeholder trust, their brand recognition, people, they may become disreputation for them. And customers may leave. They may not get contracts. Now, these are the 10. You may find 2, 3 more. So I have spent time on it, extracted that, each, you see here, very important, how you will be utilizing it. Listen, it will be helping you. When you are going through scenario, find these factors in the scenario, because these factors may result into it. And then you have to elaborate, explain how. You have to explain how this may result because of it. Scenario facts, how this may be result because of it. And that should be the relevant discussion, relevant to the scenario. Now, so now come next, very, very important. If the scenario describes there is some change in something, in system, in customer, in product, in technology, there is risk. If there is pressure, again, pressure is price pressure. Pressure to increase sales, there is business risk. You are dependent on certain supplier, certain customer, on certain ingredient, on certain employee, there is business risk. Explain business impact only. Do not tell impact on financial statements. Impact on business, on its cash flows, on its profits, on its survival, always. And how, explain how this impact may arise because of it. Now, so this is the marking grid in front of you. How 2 marks are awarded. So weak answer, generic risk, no scenario link, no marks, 0 marks. Risk identified from scenario, brief explanation, you may get 1 mark. Risk and impact you identified and explained. You linked scenario-based business impact properly explained. In-depth analysis, you will get 2 marks. maybe 1.5. Now, what is the answer ingredient? Scenario linked answer, impact, how it is arising, how as well. Quantification, severity if possible discussion, and scaling. 2 marks technical, 1 most probably, which will be a professional mark. And this professional marks is given 3-4 risk, which is actually all if they have discussed professionally, then you get that. So 2 complete marks. Very important. Now, so again, you see, I have repeatedly done it. What full marks are always include? Answer always include. Full mark answer. Direct reference. Business risk explanation. Wording from that this how operation will be disturbed, how business overall may be disturbed, why it threatened, what is affected, no audit or accounting treatments. Remember that. Examiners ask you silent question. Does this student understand how the business itself could fail? Because of this factor, how significant it is? Your answer is telling, the scenario focused. Remember that. Remember, AAA does not reward quantity. It rewards relevance and depth. Got it? Now, so these are, I have given it to you people, this document. Okay, right? So now we need to talk about 2 exam scenarios. And our time, we have 40 minutes right now. And if I needed, I will be spending 10 to 15 minutes above that. Are you okay with it? Are you okay with it? 10 to 20 minutes above that time. All right. Just a minute, please. Now, I have given you this exam kit in the same folder. Yes. So today's question to be discussed are Hammer Company, and the second is Mercurio Company. These 2. And your home assignment is, what will be your home assignment? That should be Heart Company. Okay, leave Heart Company. Magreta Company. It's business risk part. You will be solving it and sending me via email on my email address. Note it down. LINK because this email I never miss to check. gmail.com. Even other business emails may be missed. So here, LINK to hamza@gmail.com. You will be sending me via email. Okay? Now, Magreta Company. But before, we need to learn how to solve the question. So let us proceed to the Mercurio Company first. Question number 5. It is past paper, December 2022. This Hammer Company, it is September, December 2023. No worries at all. And if I told you there is one question recording is already given to you people. Link is here. You can see this one. It's YouTube link. It is full 1.5 hour, 50 mark question solved. You have to do only business risk out of it. Okay. Now for the revision. So let us go to the Mercurio company. Question number 5. Here we are. So this is the background information. It is 1st July. Okay. What is the requirement? Let's see here. Evaluate the significant business risk faced by Mercurio company. 8 marks means how many business risks? 4. 4 business risks only. So come here. It is 1st July 20x5. You are an audit manager in a company responsible for the audit of Mercurio company, a listed company with a financial year ending 30th September 20x5. Mercurio is the country's leading specialist retailer of small domestic pets, pet food and pet accessories. So this is the information given. Now come to the business risk. Internal factors and external factor, which may become a problem for the business. It should be in your mind. So this is the first paragraph. Okay. About audit information. It has materiality discussion, which we will be doing in the next week. In the next week, we'll be doing. So Mercurio is a large listed company. Mercurio is a large listed company. Yes. Established 15 years ago when the founder observed a growth in demand for pet-related products. The company has grown steadily and is now the largest retailer of pet-related products in the country. With over 7,000 employees who are mainly staff workers in the stores, as well as selling pet products for a wide variety of animals. The store also sells small animals such as rabbit and fish. Staff members are fully trained to give advice to customers on the methods related to, yes, you see here, training, nutrition and general health. They are trained to handling all type of animal. Now 2 types. First of all, yes, the first thing is here, training for nutrition and general health. Very important. And the second, handling of the animal. Here it is. Handling. Some stores sell more unusual pets such as spiders, snakes, and reptiles, and requires compliance with report. Now, you see here, there are 3 risks. One is training for nutrition and general health. Very important factor. If they are not properly trained, what will happen? Inappropriate advice can be given, can damage the health of animals. Company may face litigations, may have to pay damages, reputation to the customer. You know that. Reputation of the company may be damaged. Customer may not come again. Fall in revenues of the company. One thing. It may bring legal repercussions as well if the training is not adequate. Second is handling of animals. That there are special animals. You know, reptiles. They're dangerous. And standards to be maintained for that. So there may become, staff may get injured. Animal may get injured. What may not be properly handled. Again, the same consequences I told you. Compliance with now this is the legal matter. Welfare standards and import restrictions. It means they have to maintain certain welfare standards to deal with the those animals. So if they do not maintain those welfare standards, what will happen? Buyer may not come to you, to them, may leave, bad reputation. If they are buying the animal which are import restricted, breach of law, they have to face legal consequences. You see explanation. Penalties may be imposed. The cost may increase. So companies' expenses may increase because of high cost. Bad reputation, inflows may fall, revenue may fall. Now, this matter I have discussed in my written answer. I will be opening that in front of you, that I can show you how to discuss each point. Here is the answer written by me. The first, welfare standards. Just see here. This is issue from scenario. Company sell. So heading, welfare standard and import restriction. So certain welfare standards to be maintained. The risk is that may breach of welfare standard, bad publicity for the company, leading to loss of customer and hence revenue. And hence revenue. You see, impact. So issue from scenario and impact, how it may arise. So moreover, they have to comply with the regulations as well. Import restriction imposed by government. How is the risk? If they deal with supplier breaching the restrictions, legal consequences, penalties. So this impact. These issue of animal and pet welfare and import restriction are quite sensitive, very important line for the buyer. This is also called, the commercial acumen, a skill, quite common sense. You have your pet, and if you know that company does not, that healthcare clinic does not deal the animal as per health welfare standard, will you go there with your pet for treatment? You will never go. Practical thing. This is why examiner says you need not technical knowledge. Everything is given in the scenario. So customer often, and any bad news, yes, will disturb the customer, leading to fall, the impact. In-depth discussion. So these lines are very much important. The second is training. Trainings, I told you, staff training. So staff provide advice regarding nutrition and general animal health. So what is the risk? Staff may not be trained. Wrong advice can be given and may result in damage caused by the advice. And moreover, it will damage the reputation of company and revenue and sale. Training will also require unusual animals. Mishandling can be done if training is inadequate, causing the risk to the customer and damaging the reputation of the business. This is very important for the company. Very important. Now, severity. Because it is core activity of the company, animal handling, core activity. You see, this is called severity. Yes. How it will affect. Now come back to the scenario once again. Mercurio company also operates veterinary clinics within most of its stores. The veterinary clinics are fully qualified vets, very important, who offer a fully range of veterinary services. Customer can pay as they go for appointment and treatment of their animal, and they can take out annual healthcare plans which cover the cost of essential vaccination and quarterly health checks. The pet plan, healthcare plans are still popular as they offer good value for money to customer, and annual income is 10% of revenue. Okay. The cost associated with the vaccination and health checks have risen above. Yes. Recent years, risen. But Mercurio has not been able to increase the price due to customers' price sensitivity. Now, this is the point. Healthcare plan may be the loss, risk of loss. So 2 points I identified. One is training of vets, veterinary services. Here, company is providing veterinary services, qualified. The risk is that the staff may not be qualified and experienced. So may be offered incompetent services, injury to the animal health. So significant risk of legal action against the company will be there. And they have to compensate in monetary terms. Not only that, legal penalties can be imposed. So 2 things. You provide incompetent services, unqualified staff. So you have to pay compensation. Second, you are not having competent staff. So legal action can be taken by government against you as well. So doubling the risk. Business risk in front of you. In-depth issue. What can happen? How it can happen? In-depth analysis. Serious. Now you see here, I have discussed 2 impacts over here. Penalties as well as compensation to the other parties. Next is a healthcare plan. Healthcare plan, 10% of business revenue. Significant. Very important for the business. So facts from the scenario. Vaccination and quarterly health checking. They include this value for money, for very popular. The risk is that cost to Mercurio of these plans may be more than revenue, may be a net loss. Sometimes business offer a service at loss to sell other at profit. However, there is still risk that company may not be able to sell profitable services to the customer. And they have a negative impact on the cash flow and profit of the company. You see, everything from scenario, they have not been able to increase prices due to customer is sensitive. Customer is price sensitive. Yes. Now, next point. So these 2 points have been discussed. So let us proceed further. So 4 were required. So 4 have been discussed. 4 points. So I have one more point to be discussed. So let us proceed. So to expand into new locations, expansion, they purchased, remember 10 most tested. So after going through this question, we will see how many out of these 5 points are present in that most frequently tested. 20 stores were purchased from Lakewell Company, a clothing retailer, at a cost of this. They purchased the store using its cash reserves. Lakewell was facing going concern problems and offered the store for sale as part of restructuring program. They need to completely refit at cost of 9 million each. How many stores? 20. So 20 into 9, 180 million needed to refit. Mercurio's management has not yet decided how many of these stores will be retained for use and which are not retained will be sold. Store will be refitted in between this time. So you see here, company has now high loan already than last year. Cash is only 36 million. From the last year, it is decreased. You can see. So what does it mean? It means company cash balance, funds availability, gearing is already increasing from the last year. Highly geared from 11% to 31%. Now, these are all factors will help. What I was thinking, 20 stores they have purchased, they need 180 million to refit them. They have only 36 million with them. And if they spend all this, 9 million each, they can refit only 4 stores. And of course, practically, they cannot spend the 36 million on it. They need that for their business. Cash is needed. Company's loan is already very high. Around, if you calculate percentage, it is 300% from the more than 300% last year. Gearing is highly geared from the last year. So company does not have funding gap. Their liquidity issues, risk is there, funding risk. Their money invested over there is tied up. And they may not, which have already 170 million invested, they may not use this anywhere else. So it will overall, company may not be earning return on it, on this investment. So overall cash flow will be negative because funds are tied up in the store which cannot be refitted, cannot and may not be saleable. And they are not earning any return. So overall profitability will fall. Now, come here. So 20 store of Lakewell, significant amount, 171 million. 9 million refitting, these are facts from the scenario, which means total 180 million is required. So they have only 36 million, only 4 can be refurbished. And company cannot spend all. So there will be no funds. It needs further funds. So unable to raise new funds, they will not be able to run this project. So already loan is high, increased by this amount from the last year. So company may not be able to finance the project. And funds are tied up, huge amount. So negative impact on its cash flows. You can see yourself. So facts from the case, smartly discuss in depth how it is impacting cash flow and profits of company. The whole mechanism is explained. I love this point. Remember, I have not discussed any audit risk, any impact on financial statements, any audit procedure, any audit risk, any control test I have not done. All I have done is, which is here. What I have done is, that is here. Yes. This one. Scenario linked, facts from the case, impact on business and how. Quantification, seriousness and scaling. That's it. And remember, you cannot reach to this level of writing from the first answer, first point. Remember that. This is the issue with the theoretical paper. You need to learn it. Develop your senses on it. This line, sorry, this is very much important.